$6 trillion every single year on average is created in the stock market. The reality is that there's a lot of money to be made. Basically all in on Tesla stock at an average price of $228. Therefore, I've had the conviction to buy more despite the fact that my portfolio had dropped a lot. What's up? Welcome back. Welcome back to where I open source my portfolio and I share about my financial journey, where we are, where we're going. Today, I wanted to talk a little bit about the last 5 years I've spent in the market, right? So I've just gone over 5 years and I've got 5 principles that I want to share with you that help get the returns that I've achieved so far. So first, we'll start out, whoops, that's the wrong one. 1 second. This is my current stock portfolio, and we're basically in 97%, basically all in on Tesla stock at an average price of $228, which is just shy of half of the current stock price now. So almost every dollar at the moment, and that's, who knows, there could be a 45% drop in the next week, 2 weeks, 2 months, who knows? So I'm fully prepared for that as well, but keeping that in mind, we are currently almost at a doubling of every dollar that I've put into the market, right? Because these all are very minimal portions of my portfolio, okay? So I wanted to go over this article that I wrote in late February. And you can find this here at marksch.com in the blog. And I'm not going to read the whole thing, but I've got a few principles here. And the first one is that everyday people can make excellent investments in the stock market. Right. So in this paragraph, I basically explained that you have your own niche skills, you got knowledge, you got things that pertain to your life that don't necessarily pertain or are in the orbit of the Wall Street or the ASX, right? So you might have a bit of alpha in your own life of the things, the products that you consume and so forth. And a lot of people have this idea that it's impossible to make money in the stock market or that it's really, really risky. And sure, there are risks. If you don't invest smart, with your brains, then there's a good chance that you can lose a lot of money. However, I asked Grok, what is the average amount of money made every year in the stock market, and it's in the last 10 years, it's $6 trillion. $6 trillion every single year on average is created in the stock market, is made. That's a big pie. It's a big pie that you can get a little bit of, right? But you have to be in the game to be a part of that, right? And so people have this idea that it's so risky, but the reality is that there's a lot of money to be made. There is absolutely great opportunity in the stock market. Next point that I'm going to go on with is it's not about how many swings at the ball you make. It's about the ones that hit, right? So it's really, I think what this means to me is seeking out the best opportunity that you can find and really hitting big on it. So like here with my Tesla investment, most of what I own is in Tesla. Most of what I've earned in my whole career is in Tesla stock. And because to me, it was the best opportunity and still is the best risk-adjusted opportunity in the stock market. And when you see the opportunity, you got to really, really hit it big. And it's not about all these other ones that, I was investigating, I dabbled in, and I find if you have a little bit of money in the market in a stock, you tend to watch it more. So that's why I kind of entered these ones. But the real opportunity I saw was here, and it's massively outperformed the rest of them, right? So that's worked really well for me in my strategy. Next one is it's not about the charts. Basically just saying some people will tell you can predict the future of the market based on the movements of the previously in the chart. And I really don't think it's the best way to invest based on where the line has gone before. And I think if you were able to predict the future based on the old movements, then there would be algorithms that are far better than you at doing it. And there aren't any trillionaires, so I don't think it's a replicable skill. Totally. It's whether you get lucky or not at the end of the day, whether it works out for you if you're gambling on movements based on past movements. So anyway, moving on, emotions can be your enemy, right? Or in this case, are your enemy. So Peter Lynch, who is a great investor, you should read his books or watch his speeches. He says the stomach is the key organ when investing, not the brain, right? So, and what he means is, if we look at my purchase history here, there have been many times when my portfolio has been down significantly, right? And despite it being down, especially here, where this is majority of my net worth here, and it has collapsed here. And instead of freaking out and, buying into what the media is saying and getting into the political discourse and this and that, I've had high conviction that Tesla will be a successful self-driving or autonomous driving company and other things, but this is not an analysis video. I've been extremely confident in the future, and therefore I've had the conviction to buy more despite the fact that my portfolio had dropped a lot, and never sold a share after early 2021. So that worked out quite well for me, even buying when things looked really, quite frankly, they looked pretty bad in terms of the stock, but it's not the way I saw it. And this leads into the last one, which is about making your own decisions and really having conviction in the companies that you're purchasing, right? So if you just follow the advice of someone else, I'm buying this, you should buy this, then you will not have the mental fortitude to be able to buy more when you've lost over $100,000 or whatever it may be, whatever a large sum of money is to you. But when you make your own decisions, when you think for yourself, you're able to build that conviction and buy in times where it's really cheap when everyone else is selling, right? So basically just don't be a sheep and make your own path. It's usually better off. And I've said that in the conclusion there, funnily enough. So yeah, I'd love to hear what your principles might be when it comes to investing. What are you investing in? Let me know in the comments. And any feedback is more than welcome. I am keen to talk to you in the comments section. So yeah, thanks for watching, and I'll see you in the next one.